Greatness is not in where we stand, but in what direction we are moving. We must sail, sometimes with the wind and sometimes against it. But sail we must and not drift, nor lie at anchor. Oliver Wendell Holmes. And Chief Justice Holmes is so right. What so many people are doing now is they've lost so much in their market, they are frozen. They're like corpses just waiting to be buried in the next down move deluge. And for those of you who are interested, at the end of the program, I'm going to do the regular thing I do every Friday at the close of the market, the weekly comprehensive review and forecast. But for those of you interested, stay tuned to the end. We're going to cover real estate. We're going to cover what's happening with Bitcoin and oil. Talk a little bit about those things, but let's jump into these markets, see where we are at the close of the week. Check it out. We had a slam down, of course, that started occurring when we had the weekly vertical crossover on the week ending the 28th of February. No one could believe it. I had a hard time believing it, but that's what the charts showed us. The next week, we had more down movement, but let me move the weekly vertical out of the way so you can see it didn't go down as far that prior week. We had a sideways slide, some up movement, didn't look as bad, and then, of course, tragedy struck the week ending the 13th and then the week ending the 20th of March. Those were horrible weeks, down, slam down weeks. Then the following week, we did see it plumbing the lows, the lowest, 218.26. And then it recovered some and moved up some. And what have we seen happen over the course of this week? Check it out. We have on our Hakenashi candlesticks a doji. It's a green doji. It means indecision. Lots of it. The market is just hanging there, hanging by a thread. What's the overall mood of the market? Well, let's look at the price percent oscillator. Our lagging indicator shows us down movement. Derivative oscillator lost a little bit of downward momentum, still very negative. So the overall mood of the market, down. How could it not be? America, the world, 150 developed nations out of work. And again, my friends, as I tell you, it is productivity that builds wealth, not the government printing money. They can throw things at a short-term, in a short-term nature, but it will not affect a long-term problem. Now, what do we see on the two-day chart? It too is still negative. It has switched over on the derivative oscillator. It's popped over green. Price percent oscillator still negative, sliding sideways. We can see those 4 days of strong up movement. Then the market, a spinning top we saw back on the two-day candle ending the 1st. That was Wednesday, and then the Thursday, Friday candle, a down candle on the two-day chart. And again, things are still down on that two-day candle, still down on the two-day chart. Price percent oscillator is negative. So again, the mood on the two-day and the weekly down. Now look at what we have trying to happen. It just didn't quite cross over going down at the end of the day. We had sort of ambivalence in the morning. If you remember, the morning started off up, then it moved down, and then in the afternoon, it plumbed some lows and then came up from there, down overall 1.45%. Don't quite have a crossover going down on that 4-hour chart. What will we do? We'll continue to look and see what opportunities are presented to us to continue in down moves over the course of this next week. What will it be like? Well, the contagion apparently continues to spread. We're not working, and America is still shut down. I can't imagine it's going to be great, but we'll see where things are going as the stops are pulled out. If you've been reading things in the market, I tend to stay away from the news, but so much of it drives everything these days because we got nothing else to go on, folks. America's not working, not producing anything. We do see that gold, well, we'll get to gold when we get to gold. We'll get to oil. We'll get to real estate when we get there. That's where we are on the S&P 500. Again, waiting to see if it's going to roll over going down over the course of the next week so we can jump into a down trade. That's the bottom line. Now, a little bit different in the Nasdaq 100. Still heavily down. We have a green spinning top, a green hammer sort of. Again, up movement, some down movement, a small green open box candle after all of this down movement. Again, price percent oscillator still heading down, basically the same angle it had been in the prior week. Derivative oscillators lost a little bit of downward momentum. 2-day chart, we see that it is still negative. The derivative oscillator did go over to positive. Look how we ended the week with the 2-day candle representing Thursday and Friday. Down candle after a prior red spinning top, means indecision, tending down. Again, that's where we are on the 2-day. We go to the 4-hour, and the 4-hour actually did move over going down in the afternoon. Now, we've not hit a low like we hit back on the 1st of April. That low back on the 1st of April was 180.86. Low here, 181.29, but the derivative oscillator is gaining downward momentum, and we do have a crossover on the 4-hour chart. How many of you jumped into practice trades like I did at the end of the day to see where that takes us over the course of this next week? We shall see how those work out for us. Again, not our favorite way of entering trades. What's our number one favorite way? You guys know what works time and time and time again. Of course, the weekly vertical crossover, because that's a gigantic shift in momentum, our biggest shift. Then, of course, the next one that we like the best is the 2-day recross, where the 2-day has moved up and then crosses back in the direction of the weekly. I'll show you one of those for real when we get further down the line, because that is not a real one. That's the one that portended the crossover going down in the weekly vertical crossover. So we'll talk about that when I get there. Now, let's keep moving through these charts. So what do you watch for on the cues? Again, confirmation of that crossover going down, and either you're going to practice trade puts or something like PSQ. And again, that is a short of the Nasdaq 100. So we're going to leave stocks and we're going to go to bonds. Bonds up for the day. And bonds still haven't hit the peak they hit back when bonds just tore the roof off. 179.70 on the week ending Friday the 13th of March. That wasn't a bad day for people owning TLT. And what do we see this week? 170.33 was the high. Nice big green up candle. Price percent oscillator heading up. Derivative oscillator still losing momentum. That's from that squirrely, weird week ending the 20th of March after the big pop-up week prior. We go from, so decidedly moving up on bonds. We look at, and this is where we saw the recross I was telling you about. We saw that gold crossed over going up on Friday the 13th, and it moved up, up, up. I'm sorry, that is not gold, of course. That is bonds, but let me make sure I've given you the right date. As Friday the 31st is when bonds rotated over going up. That was Friday the 31st of January when bonds started moving up. And what we had happen, and you can see this occur, the 2-day chart continued to move up and then it headed down and then it recrossed. And when it recrossed going up, that was a 2-day recross, and the jumping in point somewhere around that last figure, around a 160, 161, something like that. And of course, attaining up to a high of 170.33. Yeah, 170.33 is the high. So again, it's about $10 in my book. That's not a bad move over the course of anywhere between 2 weeks and 4 weeks. Not bad at all. Price percent oscillator continuing to go up. Derivative oscillator still negative. Now we go to the 4-hour chart, and we see that 4-hour chart, it has continued to just weaken, 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 hasn't quite crossed over. Maybe it did at the end of the day, but look at that trend line. It just keeps running up. That trend line staying above the 2-day and the weekly. So those of you who are in bonds, continue to watch that 2-day recross as it works its magic. Pay attention. Don't hesitate to take profits when you want to, but again, it just looks pretty and just keeps moving up. Now, could it crash again and get weird like it did on the week ending the 20th? It sure could. It sure could. Or could it boom up again like it did on that week ending Friday the 13th? Yes. Yes, and remember, this is a long run in bonds from all the way back on January the 31st when we had that weekly vertical crossover. So you've seen now the effects of a weekly vertical crossover and how good a 2-day crossover can be for you. That's our long-term and intermediate charts. It's that short-term 4-hour chart that can get squirrely. That's the last one we want to trade on, but we'll do it in a pinch if everything's moving right. Okay, lastly, we go to gold. What is gold up to? Gold's up 0.49% for the day, ending the week with a green up candle after gold just crashed going down on that week ending the 20th of March. Tried to recover some the next week ending the 27th, and this week up higher the week ending the 3rd of April, but again not recovering to where it had maxed out all the way up to 159.25 on the week ending the 6th of March. So we'll see. Gold is moving up there. Haven't had that crossover yet, so it's still in negative territory. That's why the arrow is down and the trend line is down. We go to the 2-day chart. And of course, what do we have at the close of the market today? We actually have a 2-day crossover. Now, you need to have a 2-day crossover before you can have that weekly. Sometimes they'll cross at the same time, but we do have that happening. Maybe, folks, if you mark your show notes, maybe you'll see at the end of this next week a crossover. Now that the 2-day is, maybe that weekly will crossover. We'll have an opportunity to buy some gold in a practice trade. But we do go ahead and note that the 2-day crossover has occurred. We're just waiting for that weekly to confirm and go with it. So we have the derivative oscillator still a little negative, price percent oscillator heading up. Go to the 4-hour chart. And we look at that, it's trying to cross over. Looks like it did too at the end of the day. So we have 2 days of nice up movement in gold. We'll continue to watch and see how gold shakes out for us. Now, for those of you who just wanted us to cover the ETFs, we have done it. You may go now. If you would like to know more about what we are seeing, I'm going to go into that now also with the caveat. We're not financial advisors. We are an education firm. We want you to practice trade with us. None of the advice we give you is for actual money trades. It's for you to practice trade. And again, I keep encouraging people. I've encouraged some people for years to do it, but they've just been too busy. And as the market crashes around them, they wonder why they don't know what is going on. And again, we all have just as much time as anyone else, and you can devote it to whatever you think is important. And I go back to that Oliver Wendell Holmes quote about greatness is not where you stand, but in what direction you're moving. Please don't just stand around. Move in the direction of learning how these charts work. Move in the direction of educating yourself. 10 to 15 minutes a day is all we ask. We must sail, sometimes with the wind and sometimes against it, but sail we must and not drift nor lie at anchor. Don't be one of those people that always talks about when I find time, I'll do it. Find time now. You got no more minutes in a day than I do, and I am a busy person. I find time to do this for you guys free every single day. Why? Because it helps me immensely in making my decisions. Nothing better I learned this years ago teaching law than teaching to teach you the underlying subject. So that is the blessing I get from doing this. You guys wonder, why does this guy do this? Because it helps me immensely. Now, let's go on and talk about oil. Look at oil. We're going to go to that weekly chart first and just take a look at oil, how it cranked down so hard. Crossing over on that weekly chart, how many of you follow oil and shorted it then? Or, as one person wrote me recently, they had gotten crushed in oil. Yes, they did. If you were in oil and owned it somewhere around the $13 mark and you watched it sink down, oh my word, all the way to $4.26, you would have lost your mind. So again, oil, which is the thing that runs our world still, with that crash affected the markets just over the top. So much of the U.S. economy has been supported by the fracking boom. Other parts of the country by the offshore drilling. I mean, again, just a devastator to us. Where is oil going? Well, on the 2-day chart, you can see that it did show a decent week for the first time in a while. This week hasn't crossed over going up yet, but that price percent oscillator is moving up, derivative oscillator, the leading indicator, losing a lot of downward momentum. Maybe you'll have a 2-day cross. We look at that 4-hour chart, and you can see that the Saudis sure did something, because oil sure as hell moved up over a 2-day period. So again, those of you who are looking at oil, continue to pay attention. Of course, you're going to want to have that weekly vertical crossover work in your favor at some point. Why? Sure, you could get in now, but you could see the same kind of crashing over this next week. The magic of the weekly vertical crossover, my friends, if you want to practice trade this, is that it confirms solid trends, just like it did here. It showed you that, yes, indeed, it really was going to happen and was accelerating. And as you saw, the derivative oscillator and the price percent oscillator both rotate over at the same time. You saw it try to move over back around the 18th of October. There just wasn't anything for it. Derivative oscillator stayed positive, just didn't happen. And really, price was just sort of floating within a dollar or so. But when this occurred and it started accelerating, of course, that weekly vertical crossover shows you everything. So you definitely, if you want to practice trade oil, you're going to need to wait for that to happen. Otherwise, you just take a lot of risk. I mean, you don't have to. You can do whatever you want. But time and time again, we see, and everybody's like, well, I missed the initial movement. Yeah, you did. You also missed the initial risk. People never think of that. They look at it Monday morning quarterbacking. Well, if I just would have, oh yeah, you could have just gotten in, as things were building on the up movement and not paying attention to that weekly vertical crossover going down and gotten hammered. So again, don't get greedy, be smart. Now, let's move from oil to the Bitcoin. Very interesting Bitcoin. As all of this started, you see how Bitcoin just got hammered. I mean, it went down from a high recently of somewhere around the $10,323 mark to boom, down to $5,100. I mean, that's literally, the price cut in half. Has it recovered some? Well, some. I mean, it's up to, where did it end the day? $6,500 from $10,323. And again, as you look with that weekly vertical crossover, when our charts showed it, it would have given you a portend. But really, the problem with Bitcoin is you can see how when it makes a crash like that, it just does it all at once. There's just fallout almost immediately. So you just got to be paying a lot of attention. And I can't really tell you, particularly with this latest crash, you can look back at the charts. We talk about backtracking, and you can see that for the most part, our weekly chart is pretty good at getting you in that last big decline on Bitcoin. This one, it gave you an inkling that it was coming at the end of that first week, but man, you would had to have gotten out literally right as that was crossing over, not to absorb or be in the middle of the crash on the week of the 20th, because it just hammered, week ending the 20th of March, hammered down. And again, is just devastated there. You look at the 2-day chart, it's trying to recover some, and as we look back at the Bitcoin crash, actually, well, you look there on the 2-day chart, didn't happen all at once. You would have had actually even more time with that 2-day crossover. Let's just make sure on the weekly. Let's see where we were. That weekly, it crossed over on the 13th. And if we go, and this is how you backtrack. You go back and you're like, okay, the 13th. That was the 12th, Friday the 13th. Yeah, it just got bloody all at once. It would have been tough. Very, very, very tough to make that work. It just hard. When Bitcoin crashed, it just hammered. So Now you see where it is. It's trying to stabilize and start moving up again. Still, you got to ways for that price percent oscillator to go. That derivative oscillator is losing downward momentum. You go to the 4-hour chart. Of course, it crossed over back on the 23rd or the 20th in the afternoon, popped up and then slid sideways, down some, and then popped up again. So just waiting for it to get some legs and move up. Watch for a weekly vertical crossover. They've worked in the past, but again, until you see something like that occur, Bitcoin just becomes more and more dicey. But again, you can sure practice trade it. It's listed on the New York Stock Exchange. Okay, now let's go to real estate. And we're going to start. And folks, if you've been reading the articles lately, those of us who own a fair bit of real estate, we have no idea what it is worth now. But if we look at the Vanguard Real Estate Investment Trust Exchange Traded Fund, which is the largest fund of this type in the world, much, much larger than any other one. Look at what happened to it. This can give you some idea. Now again, these are just my thoughts, some idea. It was at $99, friends. So it's about $100, and it dropped to a low of $55. Where is it right now? Closed at about $67. Now that looks like about a 30+% loss in real estate value. Now again, this is an exchange traded fund. This represents real estate investment trusts, but giving you some idea as to what we may see in real estate prices as all of this shakes out. And remember, the market tends to lead things, and it of course has been leading the drop in everything as we've all become, or many of us, unemployed or underemployed, and all of the expenses keep piling up. And that real estate that we thought was so valuable has deflated potentially in catastrophic terms. If you suck out 20, 30, 40, 50% of those values, your house that you thought was worth $500,000 is $250,000. Your $1 million house is $500,000. Again, folks, some portends of where things might go. So, is this good? No. But having the knowledge about what is going on can protect you. And again, the only way you're going to get good at any of the stuff we talk about here is to be with us 10 to 15 minutes every single day. Practice trading these markets. You're going to have a long time to do this. The sooner you dedicate yourself to it, the sooner you're going to learn it. And we'll be here with you every step of the way as long as I am breathing. And my friends, I hope you stay well. God bless you and your families. Don't live in fear. Live in faith. Live in hope. Know that the good Lord above is watching over, and He will take care of us. I am sure of it. Learn to show yourself approved. Stay with us each and every day. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.